Welcome to Tough Guy Trading. This is Robinson. Today we will be looking at a few different charts, mainly my kinds of setups, the things that I look for in the market, look for reversals or when things are going to turn around, and we can actually even look at some individual candles as well too to determine entry and exit for some of the patterns that I trade. But one of the things I always like to do is look for when the market is making a new high or a new low. Whenever the market makes a new high, it tends to pull back in a very drastic way where it'll maybe come all the way down and make a new low after making the new high. This chart example here on oil on the 15-minute is a case in point. It makes a new high at $85 even, starts to pull back, comes back up again, pulls back, and then goes back up again and gets right back above my green line. This green line on here is a 200 moving average. After it breaks the 200 though, notice that it never comes back after it breaks the 200. It simply breaks the 200. I gotta change this thing because it's gonna keep coming up. It simply breaks the 200 here, the green line, and then after that comes all the way down to make a new low. But if you notice when it came down once, moved back up, twice, moved back up, and then the third time, right? After the third drop, it can't seem to break this low of 77.56. And if it can't break this low of 77.56, what doesn't go down must go up. So this starts to climb back up. The price starts to climb back up and then gets back above this green line 200 moving average. This was at the end of the day on Friday, so it didn't have any more time and the market just kind of closed right there. But if this had continued to trade, it's more than likely that this would have come up a lot more, right? Even if it just came back into this high to test this high right here at 81.06, right? So it was at 80.15 and it was trying to get back to 81.06. Just one candlestick pattern or one chart pattern I'd like to say that I use all the time would be when the market makes a new high, it generally will come down and make a new low, especially on the smaller time frames. If you're looking at a bigger time frame, that may not happen or may be less likely to happen because fundamentals, geopolitical news, that could easily influence it and send it right back higher or send it drastically lower. So, you know, on smaller time frames it works pretty well. So that was just one of my chart setups. Whenever something makes a new low, it normally makes a new high. Whenever something makes a new high, it normally makes a new low if you're looking at it on a smaller time frame. The same is true here. In DX, we look at the US dollar. It makes a new low down here at 81.39. I actually traded this. It made a new low down here at 81.39, and then from there I just went long. I traded it for more than just the fact that it made a new low and I knew it's probably going to come up and make a new high because I've traded that same pattern all the time. But it also traded that way because of this one particular candle right here. Candles are powerful, and sometimes the biggest moves will ignite from the smallest candle. But that smallest candle has to be at an area of location, at an extreme low, at an extreme high, or right when the market was trading sideways and did a Bollinger Band squeeze, right? So you can't just pick any candle and say, hey, this looks like a pretty good reversal candle. I've read a couple books about this particular candle and it's supposed to go up, or it's supposed to go down, it's supposed to go sideways. It's not necessarily true. That candle has to be combined with a lot of other elements, right? Like if you're making tea or something, you need tea, you need water, you need sugar, you need lemon. If you like lemon in your tea, you need milk. If you like milk in your tea, it may need a lot of other ingredients before it's actually drinkable. Because you can't just drink the sugar by itself, and you can't just drink the tea bag by itself, and I guess you could drink the water by itself, but that would defeat the purpose of wanting to drink tea. So if we look at just some of the small candles, sometimes you could really get a lot of big moves. Really get a lot of big moves. And this is the candle that I'm emphasizing right here. This little small candle. As soon as the market sold off and came down into this candle, I'll move the mouse so it gets a lot more clear. As soon as the market sold off and came into this little green candle down here on my chart, I went long immediately and placed a stop right down here at the bottom. So the low was at 81.39. My stop was probably at 81.38. because I wanted to be right in there. And if you notice, the market never comes back down to this level again. It scares you a little bit when it breaks down and comes down to here and breaks this 20 this way in this full red candle. But knowing what I know about these candles here, I know that the market could potentially go way, 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 way higher. And it did. It went much, much higher from the original entry price that I had got in here from. And this was a pretty big trade for me this week. So it's just something to keep in mind. Whenever something makes a new low, it can make a new high. Whenever something makes a new high, it can make a new low. So this example won't be long. Just always remember that the smallest moves can ignite, the smallest candle, can ignite the biggest move. And you just kind of got one of my little small strategies. When something makes a new low, it can make a new high, especially if you're looking at it on a smaller time frame, like I said before. So this has been a chart session with Robinson here at Tough Guy Trading. Feel free to go to the website, look at the other videos that we have, subscribe, get involved. I'd like to hear what you think. If you have any questions, I'm pretty good at getting back to people. If you want to know something, if you want to know more about my trading style, feel free to ask. And go to the website, join the blog, and get involved. Thank you, and goodbye.